Warren Buffett made his first investment at just 11 years old. Not with millions, not with insider connections, not with a hedge fund, just a small amount of money and a mindset that would eventually build one of the largest fortunes in history. Today, Buffett is worth over billions of dollars. But what's fascinating is this. Most of his core investing principles can be applied even if you only have $50 or $100. Because according to Buffett himself, the size of your starting capital matters less than your habits, your patience, and your ability to think long-term. And in a world obsessed with fast money, Warren Buffett became rich by doing the opposite. So today, we're breaking down Warren Buffett's biggest investing secrets for people starting with a small budget. And one of these lessons might completely change how you think about money forever.
Secret 1. Think like an owner, not a trader. Most beginners approach investing like gambling. They chase hype, they panic during crashes, they buy because social media tells them to. But Buffett thinks differently. When Warren Buffett buys a stock, he doesn't see a ticker symbol. He sees a business, a real company, with employees, products, customers, profits. That's why Buffett famously said, "If you wouldn't own a stock for 10 years, don't think about owning it for 10 minutes." This mindset changes everything. Because instead of constantly chasing quick profits, you focus on buying strong companies that can grow over time. And here's the good news for beginners. You no longer need thousands of dollars to start. Fractional investing allows you to buy small pieces of companies like Apple, Coca-Cola, Amazon, even with limited money.
Secret 2. Patience is the real superpower. Modern culture rewards speed, fast content, fast delivery, fast success. But investing works differently. Buffett became wealthy because he mastered patience. In fact, a massive percentage of his wealth came after age 50. Think about that. Decades of compounding created exponential growth. This is why small investors should never underestimate consistency. Even tiny monthly investments can become powerful over time, because compound interest behaves like a snowball. At first, it moves slowly, almost invisibly. Then eventually, the growth becomes enormous. But most people quit before reaching that stage. They get bored, distracted, or discouraged by small beginnings. Buffett understood something most people never do. Wealth is built quietly.
Secret 3. Live below your means. One of the strangest things about Warren Buffett is that despite being incredibly wealthy, he still lives relatively modestly. Because Buffett understands a powerful truth. Wealth is what you keep, not what you spend. Most people increase lifestyle faster than income. More money comes in, and immediately more money goes out. But investors think differently. They create a gap between income and spending. And that gap becomes investment capital. Without money to invest, wealth building becomes difficult. This is why budgeting matters. Not to restrict life, but to create future freedom.
Secret 4. Invest in yourself first. Buffett repeatedly says, the best investment you can make is in yourself. Why? Because skills increase earning power, and increased earning power creates more money to invest. This includes communication skills, sales, business knowledge, financial literacy, technology skills. The more valuable you become, the easier wealth creation becomes. And unlike stocks, nobody can take your skills away from you. This is especially important for young people with small budgets. Sometimes the best investment isn't the market. Sometimes it's learning a skill that increases your income permanently.
Secret 5. Ignore the noise. Financial news is designed to trigger emotion, fear, greed, panic.
But Buffett avoids emotional investing. When markets crash, most people panic sell. Buffett looks for opportunity. When everyone becomes greedy, Buffett becomes cautious. This emotional discipline separates investors from gamblers, because long-term investing is not just financial. It's psychological. And people who control emotions often outperform people with more intelligence. The biggest myth in investing is that you need a lot of money to begin. But Warren Buffett's story proves something different. Small beginnings are enough, if combined with patience, discipline, long-term thinking, consistency. Because wealth rarely appears suddenly. It grows slowly, then suddenly looks obvious years later. So Warren Buffett's biggest investing secrets are: think like an owner, master patience, live below your means, invest in yourself, ignore emotional noise. Simple ideas, but incredibly powerful over time. And remember, starting small is infinitely better than never starting at all.